Yeah, so we published the feasibility, and the key outcomes were 7-year mine life. We're doing 100,000 ounces a year. We're risking $32 million in capital to make 70 million EBITDA each year. Over the last 14 months since the scoping study, we've added 300,000 ounces. We now get that to 767,000 ounces in the mine plan, and we've grown that mine life mainly through drilling the extensions of the Matilda mine. The historical pits there are 700 metres long, and they go about 50 metres deep on average. The main pit at Matilda is now over 2 kilometres long, and it's going 130 metres deep. Yeah, in the feasibility study, so far we've only drilled the Golden Age deposit, which confirmed the high-grade nature of that deposit. The average composite grade from that drilling was 14 grams per tonne. In the feasibility, we've also brought in Bullet and East West, which are very significant deposits, but we've still only looked at a fraction of the underground and also the open pit resources as a whole. That 7-year mine life, if we look outside of that, there's still another 3.9 million ounces sitting outside that mine plan that we're currently doing mining studies on. Yes, we put our main funding agreement in place in June last year, and since then, we've knocked the feasibility study off in 7 months. So we've had very limited drilling done to date, and we're really interested in chasing the extensions of the Matilda mine. There's very little RC drilling outside the immediate pit area. Another source of baseload feed for the mill is the Lakeway Williamson area, and it's been Newmont did a lot of air core drilling out there, and there's only been 40,000 ounces mined, and we're very keen to get a lake rig out there and continue drilling out those deposits which have got very large tonnage potential. Yeah, the Capex is interesting. It's going to cost us $32 million to get this into operations for a 100,000 ounce producer. Now that is very, very capital efficient. Our operating costs are in line with our West Australian peers, and that's going to allow us to produce 70 million EBITDA a year. With the sulphide recoveries, we've assumed the 20-year historical average of 83%. Now, in the past, those recoveries have been as high as 92, 93%. And one of the things we need to really focus on is the flotation circuit. The sulphides will come on stream in year 3, and we've got 3 years to really look at optimising the flotation circuit to maximise those recoveries. On publishing the feasibility, we've now committed to refurbing the plant, and that is critical path to getting into production. Approvals we're hoping will come through by the end of March, and we'll get into a mining decision and mobilising the mining contractors in June, and 6 weeks mining prior to commissioning the plant and pouring gold in 6 months' time. And we've designed the mine plan so it generates a lot of cash flow up front, and by January next year we'll publish our quarterly showing how much cash flow that the project is generating.